We're back now for episode number 11 of the Twin Cities Real Estate Pros, and Tim O'Keefe will be our guest again from Liberty Mutual. My name is Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus. David Nelson is here as well, licensed real estate agent with RE/MAX Advantage Plus, and kind of set the tone for, because we're going truly multimedia here as we're trying to go live on Facebook. We are also on our podcast on SoundCloud, on our website, TwinCitiesRealEstatePros.com, and also on YouTube at ImperialHomeTeam.tv. And David, I need you to talk for a few seconds because my phone just fell.
Right.
So I've got to go fix it. So you talk.
Yeah, pretty soon we'll be on Laserdisc as well as Beta VCR. Nice. So that's going to be coming to a Radio Shack.
Blu-ray.
Blu-ray with whoa, baby steps. Yeah. So yeah, that's much better. We noticed that when your phone kind of went. We're like, whoa.
There you go.
This is really live.
We call that fill in the business. So good job filling there, David. But
yeah, it was bad.
Yeah. So Tim O'Keefe is here. He's a insurance agent. That's what you do, right? Insurance.
That
agent
is what I do
for Liberty Mutual, and he's also my insurance agent, so I should know what he does. And he was with us for episode 10. Had some really good points, just kind of talking generally about homeowners insurance. This week we had him back because we didn't get enough information out of him last week, where we're going to talk about umbrella policies as well as condo and townhouse policies. So we'll check in with Tim in a little bit. But as I mentioned, we are on the TwinCitiesRealEstatePros.com website. That's where you can see and hear us. We're on YouTube. You can also hear the audio version on SoundCloud, and we're going live on Facebook on our Imperial Home Team page.
Correct.
And also out on my personal page. I'm not sure if you're on, or not on your personal page.
I can't. I've got one phone.
We only have so many phones. So truly multimedia this week. And what we do is, if you haven't joined us before, we talk about the real estate market kind of in general. And we have people like Tim come on and who are somehow involved in the real estate industry, whether it's with buying or selling a home, maintaining your home, insuring your home, things like that. So we have those conversations, as well as just talk about and promote the listings that we have either on the market or coming up, and try to find some solutions for buyers as well. So David, I know you've got some things coming on the market you want to talk about.
Yeah, so for those that are watching live, this is really important because today, it's Tuesday, we're taking photos of the property, and it's going to be hitting the market possibly tomorrow or Thursday. 4271 Suncliff Road in Eagan. We've been receiving tons of calls about it. So finally, it's going to hit the market, and it's going to sell the first day with multiple offers. So guaranteed. So just prepare for that. 4271 Suncliff Road, Eagan. It's going to be priced at $259,900. 3 bedrooms, 2 bathrooms, fresh paint, fresh carpet. It's got a beautiful yard. It's flat. It's usable. New roof, new siding. This place is, we say move-in ready, but this is move-in ready.
Truly move-in ready. I've got somebody who was originally started looking in Eagan and some other places too, but they've decided not to move to Eagan because the buyer's mother lives in Eagan, and they decided that's way too close to mom. Otherwise, that sounds like it would be a great place to live.
Well, thinking outside the box, Ron, maybe you could move the mother.
There you go. That's a good deal. He could buy the house in Eagan, and we can get her a place somewhere else.
Yeah, I mean,
domino chain. It's perfect.
I mean, seriously, Ron, think outside the box.
And then Lakeville too. You have something?
Yeah, and I can't really talk much about it because I'm meeting with the guy this week. But it's another 4-bedroom, 4-bathroom house in Lakeville. It's probably gonna be priced between $350 and $400. It's in the Brackets Crossing area, so if you know where that is in Lakeville, it's very quiet, very nice area. And then also a possible home, a 4-bedroom, 4-bathroom. I like 4 bedrooms and 4 bathrooms. I don't know. In Dundas.
One for everybody. Wow.
Yeah, so we're going a little south of the metro, but it's a beautiful home in a very established neighborhood. And we don't know the exact price of that one yet, but that will definitely fly off the shelves too.
Okay. Dundas Dukes, the name of the local baseball team there. That's all I know about Dundas.
And it's actually, people think how far it is, but it doesn't take that long. So I live in Lakeville, down there in 15, 20 minutes. And sometimes it takes me that long to get into Farmington, which is substantially closer in mileage. So again, Dundas is not that far, and if you're working in Burnsville or anywhere, it's pretty easy to get up 35.
Yeah, well, I live in Golden Valley, so Dundas is far.
Yeah, but Ron, we would love to have you closer.
That's true. Maybe
you and Nikki want to
here
move
weekly here. Like, I don't know, we don't mention that very often, but we actually are in Lakeville right now for our show, so I make the trip down.
Move the mother and then move to Dundas.
There you go. That'll all work out.
Look at the business.
Yeah, there you go. But I do have a listing coming up down in the South Metro. We're still figuring out whether it's Lakeville or Rosemont, but
the Bermuda Triangle.
Yeah, it's kind of where Lakeville, Rosemont, and Apple Valley all meet. It's on Foliage Court. I don't have the paperwork all signed up yet, but we had a conversation yesterday. We've got things scheduled, and we'll have it all together. And that will come on the market the week of May 8th, or May 10th, excuse me. So just after Mother's Day. It's a townhouse, 3 beds, 2 baths, a split level with a 2-car garage. very nicely updated compared to the other townhomes in that area. And there have been a couple of recent sales there. We're probably going to come on the market just under 160, somewhere between 155 to 160, something like that. So that'll be coming up in 2 weeks. And next show, I'll be able to talk specifically about it and have some pictures and things like that. Also tomorrow, I'm heading out to Chanhassen to meet with a mother of a good friend of mine that I went to high school with, and we're going to get their house on the market. It'll be a twin home, 3 beds, 2 baths in Chanhassen, a very affordable way to get into Chanhassen if you want to take advantage of the good schools out there in eastern Carver County. So we'll have that coming up as well. And once we have the legal paperwork all signed, then we can talk specifically about that. So more of our pre-listings coming up.
And can you guarantee these will sell the first day?
I won't guarantee the first day because the last listing I had sold before the first day.
Ooh.
So I don't want to set my expectations so low.
Great qualification. Yeah.
Well, no, you can. It's all terminology. It's real estate. You can do at or before first day.
That's right. Yes. Yeah. There you go.
On or before.
Yeah. It'll sell at some point. How about that? Yeah.
Ambiguous.
Right. Yeah. All right. So let's get back to Tim O'Keefe, who was here with us last week for the big 10th episode anniversary show. So
Are we calling this a two-parter?
it's a 2-part miniseries. We talked about that last week.
Great.
So
HBO
many
like.
people have come back now for that second. You were kind of the pilot last week, and then never really came back for the next episode. But we appreciate you joining us again. Tim O'Keefe is with Liberty Mutual, a licensed insurance agent, does property casualty insurance, life insurance, and kind of disability.
Not disability.
Okay.
We're starting to get into commercial for some of the smaller commercial policies and things like that. I also work with that. So
okay, yeah. So anyway, like I said, I personally have my auto policies with Tim. I have my home, my personal home, and we have a rental property with Tim and an umbrella policy as well. We'll talk about condo policies and townhome policies, how they differ from single-family home policies. But let's start with umbrella to kind of continue off of where we were last week.
yeah,
The benefit of having an umbrella policy with your auto home policies.
Yeah, so we ventured into this last week, and I had mentioned this, that really, with insurance especially, it's an expense for everybody. It's something you have to have legally. And then what I work really hard to do is make sure you're spending the right dollars, because you spend all this money and you hope it's going to be there when something actually happens. And there's no better example of that than an umbrella policy, where they're fairly inexpensive, and umbrella is a nickname because it goes on top of all of your other insurance policies for liability. So goes on top of your auto insurance for your homeowners. If you have a rental property, it would go on top of that as well. And usually it's in $1 million increments as far as the extra coverage you get. So if you have the more dramatic liability cases where, say, there's ongoing healthcare bills or things like that, which would exhaust even the best written home policy, with, say, you have a few people that are injured on your property, then this umbrella will kick in and make sure that you're not paying out of pocket at that point. When I say spending the best dollars, you're normally talking $20 to $30 a month to have an extra $1 million. And the reason they're so cheap is you don't need them that often, but the one time you need an umbrella insurance policy is life-changing for everybody. So that's, again, spending your insurance dollars wisely. You're going to have to spend them anyways. So,
And I think the important thing to note, you just have one umbrella policy. So no matter how many properties you have, how many cars you have, you just need the one policy that covers all of your policies. So it's not like you have your home policy with an umbrella and your auto policy with an umbrella.
Right, and they're actually called a personal liability policy, and they expand a little bit what you're covered for, including, I like to tell people, anything you can be sued for personally. So myself, someone comes after Tim O'Keefe for libel or slander. One of my jokes didn't hit home well.
And how could they contact you? By
Yeah.
dropping off a subpoena. Yeah.
So it expands some of that coverage, and it makes sure, even if it's a frivolous lawsuit, you can call Liberty Mutual or whoever you have your umbrella through and say, this is what's going on, give your statement, and then your insurance company takes over it and they use their lawyers. And an important point is that $1 million worth of coverage is the actual settlement amount. All the lawyers' fees and litigation fees and those type of things are not a part of that $1 million. That's all paid for, I guess you could say.
So paid for by the umbrella policy, the actual policy holder doesn't have to pay the attorney fees and things like that?
So Liberty Mutual is liable a little bit at that point. So we'll use our litigation team, and you have $1 million pot just to settle whatever issue you're facing. You don't have to take out the man hours and the billable hours out of that $1 million. So it's really it's great. It's a no-brainer, really, if you're talking for $20 to add $1 million in case and to give you a real world example that I came across, it was a family that was driving, so a husband and wife coming over a hill, and the sun shone in their eyes, and they drifted over and struck a minivan of a family of 5, actually, and 100% at fault. There's no question about it. Terrible situation, all great people involved, and there was a death in the other family, which is horrible, but all they had to do was give their statement. This is what happened. Yes, we were at fault. And they're done with the process. They don't have to go through hiring a lawyer and actually litigating against this other family because they don't have any other options other than to try and limit their loss because they can't just pay millions out of pocket. All they did was give their statement, and then insurance company took care of it from there. They didn't have to go to court or anything like that. It was settled out in court.
Wow.
So for $20 a
Sure,
month, it's
right, $20, yeah,
unbelievable.
Right. So to pay $20 to get to that $1 million, you have to have that policy in place for a really long time. Which I think, to your point, Liberty Mutual and every insurance company, they don't want to pay out that money,
Right.
so they will do what they can, as you said, to litigate it to limit the amount of money they have to pay out.
Right. I think a
They
bit
want to
of a
pay reasonable
misnomer.
costs, but they also want to protect it, so that's why they're going to fight for you.
Exactly. And it's always, the buzzword in insurance is always like kind and like quality. So there's a lot of room to push back, and that's part of what I work with my clients as well. When you're settling with an insurance company, well, they'll say, to break it down in easier terms, say you have a claim, a fire, and you're replacing a mattress, and the insurance company says, that mattress I found online for $700. And you're like, there's no way I could get that mattress for $700. And if you can look it up and say, yeah, it's $700, but it's halfway across the country, it's going to cost $1,000 to ship it. Every insurance company you come back to, and especially with Liberty Mutual, say it actually costs $1,700 for that mattress. They'll say, yeah, you're right, here's $1,700. So it's like kind and like quality. It's just people push the envelope. We talked about
Sure.
last week. Like, ooh, I get a brand new TV.
Yeah, your dogs playing poker.
Yeah.
Burnt down photo actually became the Mona Lisa.
Yeah, exactly.
And one of the policies I do have with you is the umbrella policy for a number of reasons, but I also do have a rental property. I'm a reluctant landlord, or an accidental landlord, I guess, because I own 2 houses, not on purpose, but I do. So I rent out one of my homes in St. Paul.
Right.
We live in our house in Golden Valley. But that's obviously my things that go on in my house are important, but you have so little control over what's going on in your rental property, whether it's the people who live there or who they're inviting there or whatever. Mm-hmm. So again, that $20 a month that spreads out over that really helps protect me from things that happen on my rental property.
Right, exactly. And just think about with rental properties, the landscaping. Oftentimes, maybe there's something in the yard that you have no idea about. You haven't been there in a month or two, and someone trips over that, and suddenly they're betting the farm on getting all your money, those type of things. So this umbrella policy is going to step in. And the number one thing is the peace of mind, where you don't have to suddenly find a lawyer, find someone you trust, find someone who's going to be good enough at their job to handle this scenario and find the right guy. You just tell Liberty Mutual or whoever your insurance company is, this happened, I need help, I'm putting in this claim, and they take care of it.
So I know a lot of people, are working from home. Yeah. So either it's a remote job, but also there's a lot of home businesses too. Right. So assuming the umbrella policy kind of covers that as well. So let's say you do have a beauty salon in your basement or something. Right. Whereas you get traffic back and forth. Does that umbrella policy cover that as well, or is that something separate?
That is separate, and that's what I was going to get into too, because it's
segue.
Yeah, segue.
Nice job. Yeah.
Thank you.
Lots of times rental properties, and there might be people only with 2 or 3 different houses, but they'll list it under an LLC. For tax purposes, the liability related to that LLC is what needs to cover those properties. So your personal umbrella policy is just, again, for you personally. So even if you're operating a beauty salon out of your home, you need that listed as a company to cover that liability for customers coming and going. And that's something that I try and uncover during the underwriting process and say, hey, if you're working from home, the inventory for whatever company you might be doing. Say if you're doing water bottles, homemade water bottles or something like that, that needs its own policy if you're carrying it in the home and there's a claim, those type of things. It needs to be related to your company, that insurance.
So not so much, I mean, like Ron and I, we do work at home too,
Right.
so we have our home offices.
Yeah.
Is that something totally different?
It is, yeah,
Wow.
it is.
Okay.
So you're fully covered there, and lots of times it'll come down to fine points like signage on your home. So if you have a designated parking space for your company, and I don't want to get into what you need for the tax
Yeah, the best thing to do
purposes.
is call you with your particular
Yeah,
situation.
exactly, and run through it. But if you have, even with your car, if you put, say, your Remax across the side of the car, that's a different insurance liability because they might come after Remax if you get into an accident with that car. So those type of things. You want to run through all of your details with the underwriting. And that's lots of times where the benefit of a local agent, I think, really comes into play, because if you're talking to one guy with a big company in a call center, you're not going to ever get that guy again. There's very little motivation to dig into where this could go wrong, right? You're never going to bounce back. I'm not saying they go out of their way to do a bad job, but they might not dive into the weeds the same way. If you know where I go to work every day, I'm going to make sure I write your insurance the right way. And I would anyways, but there's a little bit more motivation locally when you continually are working with the same agent.
Okay, reset the show a little bit here. We're at the Twin Cities Real Estate Pros podcast. My name is Ron Johnson with Remax Advantage Plus. David Nelson is with Remax Advantage Plus as well. We're both licensed real estate agents. And that's Tim O'Keefe. He is with us from Liberty Mutual, insurance agent. And we are live on Facebook on a couple of different channels right now. We're also on YouTube. You'll be able to find that at imperialhometeam.tv. And we have our podcast and audio webcast as well. Totally multimedia today. Our website is twincitiesrealestatepros.com. We talk about the real estate industry, we talk about the market, and the different people who complement that as well. So that's what we're here talking to Tim about. We're going to transition a little bit into condo policies and townhome policies, because it's a little different than your single family home policy.
Right.
And also different townhomes and condos have separate rules. So just kind of, if you can give us just kind of a general overview difference of
Right.
a single family home policy versus a townhome condo policy.
Yeah, the number one thing is just that your townhome or condo policy, which are very similar, they'll always have a master insurance policy for the structure itself, and so that works in tandem with your personal policy. So there'll be an association or something like that that'll carry insurance for, so if it's a 2-unit townhome, to rebuild that structure if, say, there's a fire that burns everything down. But some of the coverage in there, like, it won't cover your personal property, and it won't cover some of the improvements, and we can dive into the weeds a little bit on that difference. But the number one thing is there's a relationship between those two policies that oftentimes gets confused, where a single family homeowner policy, it's all on you. You're covering it all through your personal policy. So that's the quick breakdown of the difference.
And then, so when you sit down with someone, it's obviously important for you to look at the condo association doc, and I guess more so on the real estate side. So in Minnesota, you have 10 days to look at the association documents. The seller has to give those to the buyer's agent, gives them to the buyer, and there's 10 days to review that. Financials, rules and regulations, all sorts of things, and included in there is the insurance policy.
Right.
So it's really important for you, I'm assuming, as the insurance agent, to be able to know exactly what the association is covering and not covering.
Absolutely. And really there are key phrases in there. It's not very complicated, but it's a matter of getting that information that tell you what you need. So it'll say something like as purchased. So if it burnt down to the ground, and that master policy is going to rebuild it exactly as it was purchased. So that means over time, if you remodel, if you put in new floors or things like that, that's not how it's going to be rebuilt if there's a claim, and you need to cover that via your personal policy. Or it might be studs out or studs in is a really common two phrases. Studs out means they're just going to rebuild the shell of the home, and you're going to have to do floors, fixtures, appliances, all of that.
And your stuff. Right?
And your stuff always will be your personal policy. Your personal possessions will always be on your personal policy, similar to a renter's insurance policy. So you can see that's a massive price difference if they're just rebuilding the shell and you're finishing everything versus we'll rebuild it exactly the way it was when it burnt down, which would be a studs in policy. And there still might be some phrasing in there that says we won't cover any improvements or remodeling or things like that.
So I lived in a twin home for a while. That was the same thing as we paid pretty much anything inside. So the cabinets, countertops, they would rebuild the exterior.
Right.
And it was pretty much anything studs out they covered, and then studs in was our responsibility.
Yeah, I don't know if you've run into this at all, David, but I'm seeing sometimes now with these new not new, but they've been around for 30 years, detached townhomes. So it kind of looks and feels and smells like a townhouse, but also looks and feels and smells like a single family home, but they call it a detached townhome. And some of those policies I'm noticing are not covering some exterior hazard insurance or whatever you call it. And I think it's important for us as real estate agents to point that out to the buyers and the buyers to understand as well. And also, when you look at your association fee and it's $400 a month, okay, well, why is it $400? Because they cover all this stuff.
Right.
And if it's $100 a month, well, that's because they don't cover that much stuff. Because a part of your homeowners association, you're not just the master association is not just giving you insurance for the heck of it.
Right.
You are paying it in your association fee.
Right. Yeah, and then that's the same thing too. It's like talking about your association costs. A lot of buyers look at like it's a low association and when they get into it. But then if you do delve into the association documents, they may be covering landscaping. But then like with the detached, it's becoming more and more like we'll give you a cheaper monthly association fee, but ultimately you're going to be paying higher homeowners insurance. But in the long run, sometimes it kind of it's about the same cost anyways.
Right.
So but the biggest thing is too is if you're in a townhouse and they're connected at some wall, pretty much, don't assume, but it's pretty much going to be studs in or something,
most often.
Most often. Don't assume, always look. But
that's the key with all of this, and I don't want to ruin anybody's day, but if it seems too good to be
wait a
true.
minute, there should be a disclaimer and
asterisk. Right. It's the old buzz phrase, if it seems too good to be true, it probably is. So if you have very low association fees, their insurance policy is almost nothing compared to others. It's not my lucky day. Now I can also get a really cheap personal policy and just not pay as much in insurance. Normally you need a lot more coverage personally for a claim situation, and it's something, if anything just jumps out at you during the closing process, that's a good time to really dive into the details. Why is it this way? Those type of things. And to piggyback too on your association, there are a couple things they can do to mitigate the costs for you, where some might be more expensive, but they have a fund for loss assessments down the road, where if they're going to replace the roof on the structure or something like that, normally that's a fee that's assessed to each unit. But lots of times, and you guys probably know as well, they'll collect monthly dues to build up a fund so that they can just pay that without assessing each individual unit. Whereas others, and I wouldn't even say that it's more common one way or the other on that, where with others, they don't have any sort of loss assessment fund or resources available. So when they redo the siding, here's a bill. Congratulations. Yeah. And you can put coverage for that in your personal policy. You can have coverage for that, but if you don't know, then you're just stuck with a $5,000 bill, and people didn't even know they didn't necessarily have to pay that.
They assumed.
Yeah, right.
Yeah, and that's kind of what I was also with that 10-day right of rescission. You have a chance to look at the financial statements, and you can see their balances and how they're handling the books. Because, if you see, each month they take, whatever it is, 5 or 10% of that money, stick it in a pot, or every month they're coming up, $100 in the hole or something like that. So you have and that's probably where some of that comes from improvements as well as insurance possibilities.
Absolutely.
Yeah, 'cause if you've got a large, condo association or a townhouse, and let's say a storm comes in and rips the roofs off, or they're going to repair the roofs, you better have a pretty good slush fund that can do that. And then, like Ron was saying too, that 10-day rescission. The bylaws are kind of standard for the most part, but I always like looking at the financials. I mean, you don't want to go in an association where they've got $3 extra just sitting there. Maybe a small coffee at Caribou. And so that's, again, kind of off the insurance part of it. But again, you want to make sure you know what you're getting into, make sure what's covered and what isn't covered, because you may be thinking you're saving money, but when it hits the fan, the proverbial stuff hits the fan, you want to make sure that you're not going to go broke.
And I want to ask you about the liability portion in say a townhome community or a condo
Right.
community. Obviously, if you're in my house, and again, David's up on the table and he falls over because he had one too many soda pops, that's my problem, right? But if there are these common areas,
Right.
or the front, who actually the front sidewalk, who that belongs to, the patio, or maybe you have like a barbecue picnic area, things like that.
Yeah.
Those liabilities can kind of get gray sometimes with who that is.
Yeah, so without getting too far into the details, right, you referenced this earlier, insurance companies oftentimes end up doing battle with themselves or other insurance companies about who's really at fault. And that's what would happen in those scenarios. If it's in a common area, they're going to try to assign blame to some party or someone. And oftentimes for the person who's actually suing or litigating against someone, they're trying to go after the biggest pot. And so that's going to be the association almost every time. So they're going to try and go after the bigger policy because you'll have $10 million worth of liability coverage on a master association. So you're going to try and sue that person as opposed to the $1 million. Hopefully they have an umbrella person, small time guy. So if something were to happen in those common areas, most often it's going to come back on the master policy. And the only thing you'll see is the deductible for the master policy. We didn't dive into that at all, but those are oftentimes 10, or now I've seen a few that are even $25,000 for a deductible on the master policy because they're such big policies. And the way those work, the people involved with the claim, so if your roof gets ripped off, the units it affects that they put the master policy claim on, that deductible is split among those units. So hopefully if there's a claim, there's 10 different people involved for that $10,000 deductible, so then it's only $1,000 each. But if it's just your unit, that's a surprise $10,000 bill that you could have had coverage for on your personal policy. So it's just interesting little, and that's...
You're really scaring us.
I guess
Well,
that's
really,
my
buy a
job
house.
in
It's great,
insurance.
right?
Buy a house. Great
Please
investment.
buy a house and get all the insurance you can.
Yeah.
Actually,
apparently
sell
what it
more
comes down
houses.
to. Well, yeah, that too, and then you can afford to pay.
For-
We need more
insurance
properties.
For a frame of reference, too, we're talking about policies that range from $300 to $700. And think about that difference. And if you're paying, what is that, another $30 a month, and suddenly you don't have a $10,000 bill, you don't have loss assessment if they have to put in new sliding doors because they're not up to code on every part of the building. That happened in my first apartment in Boston. The guy who owned it, there's something like, oop, turns out the doors on the back are no longer up to code. Here's a $5,000 bill that you just have to pay.
Yep.
It's those surprise moments. It's probably worth an extra $30 a month to not pay them yourself.
Yeah, it's not an insurance situation, but my wife had a condo in Kenwood condominiums on Lincoln and Emerson in Minneapolis. And not one day, but people don't go to these associations. Not everybody goes to these association meetings. Some
Thrill
people
them in
do.
it.
And there was votes and everything, and she never went. And then they decided it's a 4-story building. They needed to put in a new elevator and do some landscaping and all that. And then here, $4,000, please.
Yeah.
And they said you have 3 installments and pay it in 6 months or whatever it was.
And then it says on the letter, we decided this as
Yeah.
a group.
That's right.
And
The development and members.
Yeah, so I guess the important thing is understand your insurance policy. And also, I guess the lesson too is understand your HOA and what that all means.
that's
as
really
well.
what it comes down to. Townhomes and condominiums, you need to understand what the master policy says, or have your insurance agent understand what's covered and what's not there to set you up with the best policy.
Yeah, we'll have to have a whole other show about not having a Doberman Pinscher.
Yeah.
That's a totally different thing as well. But we're
Right.
almost out of time here. But we appreciate you though, Tim. You successfully helped us fill 2 shows consecutively. So
Mini-series.
you get a big prize there.
Yeah.
So again, that's Tim O'Keefe. He is with Liberty Mutual.
Thank you.
He's an insurance agent. And tell us quickly how people can find you.
I think all my information is going to magically appear here on the video.
It does. It's pretty
Yeah,
magical.
but some people on Facebook don't know that, and the people listening can't
Right.
see. So we're multimedia here. So,
So
you can check out Tim
talk
on
to the
TwinCitiesRealEstatePros.com. We'll put your information up on our website,
Great.
TwinCitiesRealEstatePros.com.
Thanks for having me. I appreciate it.
Quickly, David, you got a couple of pre-lists, and people want to check those out.
On the website, go to our Zillow coming soon pages, as well as everything will be on our TwinCitiesRealEstatePros.com.
All right, so again, I'm Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus. That's David Nelson, also licensed with RE/MAX Advantage Plus in the business of real estate. We appreciate you joining us for the Twin Cities Real Estate Pros podcast. And, oh, good. Maybe we're out of there.